In a moment where the independence of the Federal Reserve faces unprecedented challenges, a prominent figure in the global financial scene has issued a stark warning. Any unwarranted meddling by U.S. President Donald Trump into the Fed's affairs could pose serious risks not only to America's economy, but also to the entire global market. But here's where it gets controversial. This isn't just about internal policy disagreements. It's about the very foundation of monetary stability that has long been seen as a safeguard for economic health. European Central Bank President Christine Lagarde voiced this concern clearly in a radio interview, emphasizing that attempts to oust Federal Reserve Chair Jerome Powell or Federal Reserve Governor Lisa Cook could destabilize the economic equilibrium. She explained that if U.S. monetary policy were to cease being independently driven by expert judgment and instead became a tool for political influence, the consequences could be dire worldwide, considering the U.S. holds the title of the largest economy. Trump, who appointed Powell as Fed Chair in 2017, has repeatedly threatened to remove Powell for diverging from his preferred interest rate cuts. Though these threats have cooled somewhat with Powell's term nearing its end in May 2026, more unusually, Trump is now trying to fire Lisa Cook, an act complicated by legal and procedural factors. His efforts are fueled partly by allegations from Bill Pulte, an associate and director of the Federal Housing Finance Agency, who claims Cook committed mortgage fraud before taking her current position. Cook hasn't been formally charged, and her ongoing lawsuit to block her removal could potentially escalate into a Supreme Court case, an unprecedented move in U.S. history. This situation raises profound questions. Can a federal court justify removing a central bank governor based solely on criminal referrals if no charges or convictions exist? Typically, for-cause removals are reserved for misconduct or malfeasance in other agencies. But whether this standard applies here remains uncertain. And this is the part most people miss. The push to dismiss Cook isn't just about one individual. It symbolizes a broader challenge to the Fed's independence. If Trump succeeds, it would pave the way for him to appoint a replacement more aligned with his economic policies, potentially altering the course of U.S. monetary policy significantly. The long-held view among economists is that keeping the Federal Reserve free from political influence helps maintain economic stability. Research consistently shows that external interference with central banks worldwide correlates with higher inflation, a weaker currency, and declining stock markets. Goldman Sachs recently highlighted that undermining central bank independence has serious economic repercussions. Meanwhile, Lagarde's warning underscores that any threats to the Fed's autonomy, whether through firing or political pressure, pose substantial risks beyond U.S. borders. Despite the uncertainties, the Fed has chosen to hold interest rates steady this year, amid conflicting signals about inflation. The latest inflation data, including the Consumer Price Index and the Personal Consumption Expenditures Index, indicates inflation remains above the Fed's 2% target. Through July, figures showed a year-over-year increase of around 2.7% to 3.1%. However, recent weak employment reports and shifting risks have led Fed Chair Jerome Powell to suggest the possibility of rate cuts in the future, depending on upcoming inflation figures and employment data. With the next Federal Open Market Committee meeting set for September 17th, all eyes are on inflation reports due out soon, which will help shape the policy path. The market currently predicts a 25 basis point decrease in rates, with nearly 90% probability reflected in market tools, signaling expectations that the Fed might ease monetary policy amid ongoing economic uncertainties. In conclusion, this ongoing tug-of-war over the Fed's independence isn't merely a political spat. It touches the core of how resilient or fragile the U.S. and global economies may become in the face of internal pressures. Do you believe the Fed should remain shielded from political influence? Or is some oversight justified in the name of accountability? Share your thoughts. This debate is far from over.